Fellow business owners, in this video, I'm going to give you 7 tips to file an accurate tax return so you can maximize the tax deduction as a small business owner. My name is Jayanti Ganapati. I'm the owner of FinAccurate. We are an accounting firm based in Boston, Massachusetts. So, tip number one, as a small business owner, having a completed financial. What is a financial statement? It is your profit and loss and balance sheet. So making sure you have your profit and loss statement completed for your business. Making sure you recorded all of your income and all of the business related expenses, and you know what is your exact bottom line profit from the business. And a second important part of the financial statement is having your balance sheet completed as well, because your balance sheet is where it's going to show your bank balance matches your bank statement. If you have taken any loans, you're making sure you're recording the correct liability of your loan, and that will ensure you recorded any interest on the loan in as a business expense. So making sure you're reconciling your bank balances, any loan that you have taken, term loan or working capital loan or line of credit, you would have received a statement as of end of the year from your banking or financial institution. Make sure you reconcile the numbers that you show in your financial statement to this external bank or loan document. That way you ensure you have an accurate balance sheet. So having accurate profit and loss and balance sheet is highly critical to ensure that you reported all of your income and you reported all of the business expenses, and you arrived at accurate net profit for your business. Another thing to make sure is that this happens a lot as a small business owner. You would have paid some of the business expenses using your personal credit card, or sometimes you would have paid by cash. This happens a lot when you're going and buying something, the vendor is not accepting your business credit card, or you didn't have the business credit card handy, so you ended up using your personal credit card, or you paid cash. So these happens a lot, and making sure you identify those expenses and record them in your financial statement. That way you captured all of the expenses for your business, and you're not over reporting your profit. And another critical point when it comes to financial statement is, especially as a small business owner, making sure you are reporting on a cash basis or accrual basis. So almost all small business owner, it makes sense to report on a cash basis, meaning you are only paying taxes for the income that you earned and also received. So you're not paying taxes for the income, even though you earned it, but you haven't received the money, then you're not required to pay taxes if you are following a cash basis. It makes more sense for small business owners to go on a cash basis, and that's what we recommend, and we see most of the small business owners go by. So making sure what makes sense for your business, and report based on a cash or accrual basis. That's critical. So once you have all these items covered, you would have taken care of reporting an accurate profit for your business on your tax return. That's tip number one under the having a complete and accurate financial statement. And number two, when it comes to filing a tax return, at the end of the year and beginning of now we are talking about filing your 2020 tax return. In January, starting January, you would have started receiving tax forms from bank and other financial institutions, or from your employer, or from other business owners. They would be sending your 1099 tax forms. So make sure you collect all of the tax forms, so 1099 miscellaneous, or you would have received 1099 for any bank interest or capital gains, or other miscellaneous items from the bank, and you would have received form 1098 in case of a mortgage or interest. Make sure you collected all of those documents and have it ready, and because some of the information on the tax forms are needed when you go and file your tax return, like the payers or the sender's EIN number is required when you go and file your tax return. So make sure you collected all of your Form 1099s, 1098s, and if you are filing jointly with your spouse, if they had a W-2, or if you also had a part-time job or full-time job elsewhere, make sure you have the W-2 from the job as well. Having all those documents ready and is definitely critical. Make sure you keep a track of all of the income that you received, and cross-check all the tax forms you received to make sure you received all of them and have it ready when you go and file your tax returns. One key point to note here is that in some cases, you might not have received your Form 1099. It could be the sender did not send it, or they're sending it late, you're filing a tax return before you even receive it. In those cases, it is your responsibility to make sure, even if you haven't received the 1099 for the income that you earned, you are required to report that income in your tax return. It is your responsibility, your obligation to report the income, making sure you are never ever underreporting your income when you file your tax returns. So that's highly critical. So if you cover these things, you will make sure you gathered all of the external evidence when you go and file your tax return. Sometimes if your payer sent you 1099, you forgot to report it, this can come back and cause you trouble, because when the payer gives you 1099 and they report to IRS, so when you file your tax return, the IRS is cross-checking the 1099 reported by your payer along with the tax return. If they notice you have a 1099 but you did not report the income, so you are in for trouble basically, and those underreported income, you will have to pay taxes on it, and in some cases penalties and interest. So you definitely want to avoid that kind of a situation. And tip number 3, especially if you're itemizing your expenses. So if you're in a situation, your standard deduction, whether you're filing single or filing joint, if you have expenses which is above the standard deduction limit, then you are going to take advantage of the itemized deduction. So that's a separate form. So for itemized deduction, you have to make sure you reported all of your insurance payments, premiums, and also out-of-pocket expenses. Make sure you have a very good record of those payments of premium and also out-of-pocket expenses, collecting those receipts. It could be some pharmacy receipts or any co-pays that you would have paid. Make sure you collected all those expenses and report that in your itemized deduction. And the next section on the itemized deduction is reporting your mortgage interest, real estate taxes, any interest or dividend, or you made any charitable contribution, excise tax, any local tax, state and local taxes that you paid. Make sure you gather all of those expenses, and also the related the tax forms or receipts that you collected, or if you have a record in your bank or credit card statement, gather all that information. Make sure you are including all of those expenses, itemizing those expenses in the itemized deduction form. One key note here is do not claim any deduction which you cannot support. That happens a lot with like charitable donation. In the case of charitable donation, you can do both cash and also in-kind donation. So making sure you have a proper record of in-kind donations is highly critical. And even if you're claiming a charitable donation, make sure you have receipts to support that. And any deduction you a claim on the itemized deduction, you have to make sure you have sufficient documentation primarily the receipt for those expenses. That's a primary document. Even if you miss the receipt, you can always support that by showing a payment from your bank account or your credit card statement. But there has to be some form of evidence to prove the claim that you are filling in your itemized deduction. So that's under the itemized deduction section. So step number 4, especially when it comes to small business owners, we covered in the having accurate financial statement. You will be filling out the Schedule C as a small business owner, either as a sole proprietor or a single member LLC. You will be filling out the Schedule C as part of your tax return. So if you have the accurate financial statement, then most part of this form can be filled out with your income and expenses and up to arriving at your net profit. So what other things that can be missed out of this, especially as a small business owner, is if you have a home office deduction. As a small business owner, you might be working a lot from your home. Even if you have a commercial space, you'll be working in your office during the day and from your home either early in the morning or late nights or weekends. So you're still using your home to carry out some of the business activities. So as long as you have a dedicated space in your home that is 100% dedicated to do work-related, your business-related activities, you can claim home office deduction on your tax return. So it is calculated based on the square footage of the dedicated home office in your home in proportion to the total square footage of your home, whether you're renting or you have your own home and you're paying mortgage, any related expenses you can calculate and proportionate to the home office square footage, you can claim that deduction in your tax return. So what are some of the expenses that can be claimed in your home office deduction? So home insurance, whether interior or exterior, utilities, gas, electric, water, and if you're in a condominium, if you're paying a condo maintenance, a proportion of that, and if your home internet and your home phone, only if you use it also for business, then you can take a deduction on that as well. So make sure you collected all of this information. Again, as I said previously, you should have bills and receipts or payment records to prove that you paid those expenses, and then a calculation to support how you came up with the home office deduction. As long as you're able to support with the documents and the calculation, you are eligible to take those deductions as a small business owner on your Schedule C as well. And the second part of this that most small business owners miss out is your travel expenses. Any business-related travel that you conducted, cost for the flights and boarding and lodging expenses. If you paid any travel allowance for a staff that came along with you, claiming those deductions. And if it wasn't directly paid by the business, if you paid for the flight from your personal expenses, make sure you identify those expenses, and to the extent it's related to business, you can claim those expenses as business expenses when you file your Schedule C as well. So make sure you identify all these expenses and report those expenses when you go and file your tax return. Tip number 5. This is critical for when you're filing your tax return for year 2020. So you might already know in year 2020 we received 2 rounds of stimulus check payments for individuals. For any reason you missed receiving this stimulus check, either round 1 or round 2, now you have the opportunity to claim that stimulus payment when you file your tax return. So there's a special line called the recovery rebate credit. So make sure you are claiming the stimulus payments in this line when you file your tax return for year 2020. And number 2, again relevant for filing your 2020 tax return, is any charitable donation up to $300 doesn't have to be part of your itemized deduction. It can be above the line. So starting year 2020, it is going to be extended as well. But for year 2020, if you made a charitable contribution of up to $300, it doesn't have to be part of the itemized deduction. It can be claimed above the line. Make sure if you have that situation applied to you, make sure when you work with your tax preparer or if you're using a tax software, make sure you're reporting the $300 and claiming that charitable deduction on your tax return. So tip number 6. This is for someone who is using a tax software. I see some of the small business owners who are filing their tax returns themselves. But there's nothing wrong, especially you are up to a certain income level. I would say like you're generating 100,000 in gross income, and depending on your net profit, up to 100,000 in gross income, I think it is fine if you're using a tax software. But make sure you are looking out for these common errors. So the tax software definitely is going to guide you with the questions and make sure you are claiming all of the deductions and taking advantage of all of the legitimate tax deduction. But the software is not going to capture any principal errors, like if you filled in your personal information incorrectly, like SSN or your address or bank account. The software is not going to catch that. Or if you entered an amount incorrectly, so the software obviously is not going to catch that. So it is still your responsibility to make sure you are entering your personal information and income amounts, the dollar amounts when you enter or entered incorrectly. Double check, triple check before you go ahead and file the tax return. So that will ensure you are taking advantage of all of the deductions and paying the right amount of taxes. I see some small business owners are still filing tax returns on paper. I wouldn't recommend filing a paper tax return. You can easily make mistakes and you can miss out on deductions. There is no way of capturing that. If you use a tax software, to some extent, that errors can be avoided. But if you're beyond 100,000 in income, I definitely advise seeking help from a tax professional to file your tax return. That way you're making sure you are taking advantage. Especially as a business owner, there are a lot of tax deductions that are available. You want to make sure you are taking advantage of all of them. So the last point or the last tip from me, never ignore any letter or assessment notice you received from IRS or your state. This happens a lot with the small business owner in a situation where you are expected to pay the estimated quarterly tax payments. And if you're not making the estimated quarterly tax payments for your federal and state, it is possible when you file your tax return, you have to make sure you are calculating the interest on delay in paying the taxes, and in some cases there's penalty as well. So when you file your tax return, make sure if you haven't paid your quarterly estimated taxes, make sure you are calculating and voluntarily paying your tax and interest and penalties along with the tax filing. If not, you will continue to receive notice from IRS. If you in the past years, if you received notice for interest and penalty, make sure you are taking care of that when you file your tax return for this year. So if you cover all of these 7 points or tips, you can almost be guaranteed you filed your tax return accurately and you took advantage of all of the deduction and you are paying the correct amount of taxes with your business income and also your personal income. Have a happy tax filing season. Thanks everyone for watching.